Alright, so the next one is allowance for doubtful debt. So this is adjustment for account receivable. Okay, so why do we provide allowance for doubtful debt? Why do we calculate for allowance for doubtful debt? Okay, so this allowance is provided for the possibility that there are receivables who are reluctant to pay their debt or unable to pay their debt. All right. This allowance is due to uncertainty in the business. Okay, so the business estimate and recognize some amount of money that it might not be able to collect from receivable in that accounting period. And this estimation usually made based on the history with the customer or based on the experience throughout the years that they do the business. Okay, so that estimated amount of money is known as allowance for doubtful debt, AFDD. So what is the effect of AFDD? It reduces account receivable balance reported in the financial statements. This is important to make sure that assets and income are not overstated and liabilities or expenses are not understated. Because accounts receivable is one of the asset account. And then we want to make sure that we want to inform our users of the financial statement, that there is a possibility that we might not be able to collect all of the amount from our account receivable. We want to give an information to the user of financial statements. So how do we determine AFDD at the end of the year? So how to determine AFDD, how to prepare this estimation or allowance. How to prepare this allowance for doubtful debt. So the estimate for AFDD can be made by a percentage of account receivable. So we may prepare this estimation by giving certain percentage. Maybe depending on the experience. We might say that out of 100% of account receivable, there is a possibility that the 2% amount cannot be recovered from the customer. So that 2% will become your basis in the computation of AFDD. So the estimate for AFDD can be made by a percentage of account receivable. So AFDD at the end of the year is equal to the percentage times net account receivable. So this estimation is made at the end of the year, and that balance will become an opening balance for the following year. And then in that following year, at the end of the year again, we are going to make an estimation for doubtful debt. We are going to prepare or calculate for allowance for doubtful debt. So there might be a difference between opening and closing balance. So how to treat the difference? So how to treat the difference? The difference will be called as doubtful debt or recognized as doubtful debt in statement of profit or loss. So any increase in allowance for doubtful debt is recognized as expense, while any decrease in AFDD is recognized as other income. So let's look at together one example to understand allowance for doubtful debt better. So this is an example. So in year one, when in year one, where you decide to provide for allowance for doubtful debt, let's say for example, in that year, the account receivable is 50,000. In the following year, your account receivable is 67,500. And in the third year, account receivable is 48,900. So it is common that we have different level of account receivable from one year to another. Depending on our level of sales, depending on how efficient we are in collecting the amount of money from our receivable. So this is what happened. So how to calculate AFDD? So the business decided to provide 2% AFDD on the remaining balance of account receivable for every year. So you are required to calculate AFDD for year 1, 2, and 3, generalize the transaction, prepare an extract of SOPL and SOFB. So how to calculate AFDD? So that one is very simple. Based on the estimation given, which is 2% times 50,000. This is the accounts receivable balance. So it equal to 1,000 for year 1. Year 2, 2% times 67,500, so equal to 1,350. Year 3, 2% times 48,900 equal to 978. All right. So this percentage depends on the business. All right. So if they decide to use 2%, okay, so we are going to use this 2% times account receivable balance. Okay. All right. Okay. So this amount, okay, 1,1350, 978 is the balance CD in AFDD account, right? So balance CD for AFDD account will be on the debit side, okay, or it is known as a credit balance. Okay, so why AFDD has a credit balance? Because AFDD reduce the account receivable. So account receivable is an asset account which usually, okay, has a debit balance. Okay, so AFDD, okay, will have a credit balance. So at all time, the balance CD of AFDD will be on the debit side. Year 1, year 2, year 3. Okay, so all you have to do is to transfer this amount 1,000, okay, this 1,000 to, all right, to the account here. Okay, 1350 to here, right, and then 9782 here. Okay, all right. Okay, and then what happened? Okay, and then what happened? This amount, this balance CD will become the following year balance BD. Okay, all right. So this balance CD will become the following year balance BD. All right. So when there is a difference between opening and closing, okay, so the difference will be recognized as doubtful debt. The difference will be recognized as doubtful debt. So here we have another difference. Okay, so this is the doubtful debt. Okay, so for year 1, okay, for first year that we provide for AFDD, okay, there is no opening balance, okay, or opening balance is equal to 0, right? So 0 and 1,000, the difference is 1,000. Okay, the difference is 1,000, and that difference we call as doubtful debt. Okay, for year 2, the difference is 350. Okay, for year 3, the difference is 372. Okay, so why we have doubtful debt on the debit side, on the credit side? It depends, okay, on the difference between opening balance and closing balance. Okay, so let's say for example for year 1, balance BD is 0, no balance BD, because this is the first year that they provide allowance for doubtful debt. Okay, so doubtful debt 1,000 minus 0 is equal to 1,000. Okay, 1,000 minus 0 is equal to 1,000. Okay, right. So for year 2, okay, closing balance 1,350, okay, minus opening balance 1,000, so equal to 350, equal to 350. Or another way to find out this amount is by looking at the difference between debit and credit. Okay, so let's say for example, okay, before we record this doubtful debt, okay, we have opening balance of 1,000 and we have computed the balance at the end of the year 1,350, and then we are going to balance the account. Okay, we are going to balance the account. So how to balance the account? Okay, you have learned the step. There are 3 steps. Okay, to balance the account, first we pick the higher total. So the higher total between 1,350 and 1,000, 1,350 is higher. Okay, so take 1,350 as the total, okay, at the end of the year. Okay, and then, okay, take the total 1,350, okay, minus, okay, 1,000, minus 1,000. Okay, so when you minus 1,000, you get a difference of 350. So whenever you have to credit, okay, so this is credit side, right? So whenever you have to credit this doubtful debt, okay, this considered as increase. increase in AFDD. Okay, when you credit AFDD, this is an increase in AFDD. Okay, so the increase in AFDD will be treated as an expense. Okay, will be treated as an expense. Okay, similarly for year one, we have no balance BD. Okay, we have only doubtful debt. All right, 1,000. Okay, so we have a balance here 1,000, and then we add here 1,000, and we call that as doubtful debt. All right. Okay, so what happened in year three? So we are going to bring balance CD to year three as balance BD. Okay, 1350, and then you calculate for year three. Okay, and the amount is 978. So you put it here. Okay, so when you balance the account, you choose the higher total. Okay, at first we don't have this amount. Okay, we have only opening and closing. Okay, so the higher total is 1350. That is your total. That is your total for debit and credit. But for debit, okay, there is a difference of, okay, 1350 minus 978. 1350 minus 1350 minus 978. Okay, then you record the difference, which is 372. You call that as doubtful debt. Okay, so if you have to debit AFDD, okay, so that is considered as a decrease. Okay, decrease from 1350 to 978. Okay, right. So if I use the formula, so we have a formula here. Okay, all right. So the formula is, okay, to know whether there is an increase or decrease. Okay, so doubtful debt is equal to, all right, doubtful debt is equal to closing balance minus opening balance. Closing balance is the one that you calculate here. Okay, opening balance is the opening balance of the last year. So for case number one, year one, all right, the balance at the end of the year 1,000. Okay, no opening balance, so 0. So there is a positive difference of 1,000 increase. So this will become an expense in statement of profit or loss. Okay, number 2. Okay, opening balance is 1,000. Closing balance is this one, 1350. So there is a difference of 350 positive. So this is an increase. This is an expense in statement of profit or loss. Okay, number 3. Okay, closing balance is 978. Opening is 1,350. Okay, so there is a decrease. Okay, it should be a negative here, a decrease. Okay, so by 372. Okay, so this will become the revenue. All right. So why is it important for you to know whether the increase or decrease will be an expense or revenue? Because this will affect the preparation of your final accounts. Okay, so here is an extract. Okay, so for year one, okay, that doubtful debt is an expense, increase. Okay, so you put it here as part of expense. Okay, you add one item here, doubtful debt 1,000. Year 2, you have 350. But year 3, it is a decrease. So decrease is a revenue or other income. All right, so you have doubtful debt 372. Okay, so how did you show this in your statement of financial position? Okay, for the statement of financial position, okay, account receivable is under current asset. Okay, so under current asset, you have account receivable minus or less AFDD. So this is the amount of account receivable, okay, that has been given to you for year 1, year 2, and year 3. All right, and then you minus allowance for doubtful debt that you have computed based on the percentage of estimation. Okay, so you have your 1,000, 1,350, 978. All right, and then what? 50,000 minus 1,000 is 49,000. 75,000 minus 1,350 is 66,150. All right, 48,900 minus 978. Your net account receivable is 4,792. Okay, right. So this is how you prepare adjustment for allowance for doubtful debt. Right? Okay.